In this video, I'd like to dive into the nitty-gritty and break down what exactly happened in the SPY chart during this FOMC week that gave me a bit of tricky action and ultimately led me to kind of struggle to read what was happening on the charts this week. Overall, the last few weeks, the market has been rather trappy. Now, it's offered solid trade opportunities, no doubt, but there's also been good chances to get trapped or caught in certain trades and trade ideas. And in this video, I'd like to dive into the charts and break down exactly what I believed happened along the way. I'm recording this video on May 2nd, 2024, hopefully to get it posted on May 3rd tomorrow. And during this week, it was an extremely active week in the market. We had a lot going on with Apple earnings, AMD earnings, Amazon, SMCI. It was a large earnings week across the board. In addition to that, we also had an FOMC event, which always drives and brings volatility into the market. Now, if we dive into the charts here, I think the really fascinating thing about this particular week, and this tends to happen in FOMC weeks. In my opinion, FOMC weeks can be either a blessing or a curse, as for most traders, the blessings of FOMC will come on the days following the event, as typically trends will get either harsh reversals or strong follow through. However, in some FOMC weeks, the curse aspect of it is that sometimes the largest and best moves of the week occur before FOMC, which is seemingly random and ultimately end up providing trades that are easy to miss, right? So with that being said, coming into this week, knowing that we had Amazon earnings, Apple earnings, and FOMC, the most common logical thought process and explanation would be that the market was going to spend the first few days of the week ranging, waiting for all that information to come out. And if you think about it, it makes sense, right? If the market is awaiting big news and catalyst events, right, it would make sense that the market goes sideways and ranges while it waits for that new information to make a more decisive move. And on Monday, that held true. We had essentially a range day where we spiked up into the higher end of the range. We spiked down into a lower end of the range, but really didn't go anywhere on the day, right? Now, coming into Tuesday, again, personally, the expectation that I had was for another range day. My thought process was, well, after the bell, we have Amazon, AMD, and SMCI, three stocks that will absolutely move the market. I know SMCI is a smaller cap and it's not going to affect the SPY, but it will affect market sentiment, and semiconductors have been running the market lately. So Tuesday was a day where we were waiting for a lot of information to come after hours. So for me personally, I approached Tuesday with the mindset that I am going to trade very small, very cautiously, and most likely just leave early. I wasn't planning to stick around much on Tuesday because I really anticipated that we weren't going to get a big move before FOMC, right? Now, I don't think there was anything wrong with that thought process because on Tuesday, I was able to keep myself out of trouble and I avoided taking large losses or anything like that. But after leaving the desk an hour into the day, which at an hour into the day was right here on the chart, 7:30, the chart hadn't really gone anywhere. We'd pushed a little bit higher, we'd come back into low of day, and the chart hadn't really signaled to us that it was necessarily going anywhere. The clean downtrend had not started within that first hour of the day. So for me personally, I followed the game plan and rules that I had and the logical thought process that I had, and I left the desk. I left and I decided that I was going to be done for the day, right? And ultimately what ended up happening is the market, after spending that first hour of the day consolidating, spent the rest of the day with a very clean downtrend, right? And offering multiple entries. It was able to offer a very clean entry here. You're able to get a clean entry here. You're able to get another entry here. Another potential entry would be on the 15-minute chart right here. Like, there was valid potential lower highs to take a variety of times on this chart if you had stuck around and been there, which on Tuesday, I just wasn't. And I don't blame myself for not being at the desk. Look, if you're a real trader, you know that there's just certain times when you walk away and charts make a move without you. That's not something that you can necessarily control, because if you try and sit at the desk nonstop all day, every day, you will overtrade yourself into death by 1,000 cuts. There is no way around that, right? So I'm not necessarily mad that I wasn't at the desk, but it's frustrating to look back after the fact and see so many clear entries available. Not only that, the rationale for going lower on this day makes a lot of sense, right? We are putting in a potential lower high on the daily chart, right? Which makes logical sense that if we broke that low, we would continue trading lower, right? It wasn't, we have a doji candle here on the daily too, offering another sign of reversal. Like, this wasn't a shocking move after the fact, right? So this chart was really easy to incite FOMO, because not only was it very clear and straightforward after the fact, but there were multiple entries offered. So if you missed this move, it's likely that you had a lot of FOMO because of it, right? Now, the even more interesting part about this is the bulk of this move, as much as this move occurred intraday, a large portion of it occurred in the last 10 minutes of the day, which no one would be expected to trade, right? Taking a new entry during the last portion of the day, right? But what happens in that last 10 minutes of the day is, naturally, we all see how large of a move 0 DTE contracts or any contracts would have made during that. And again, it continues and continues and continues to incite FOMO, right? So after Tuesday, I looked at the charts and had a look of kind of like, pardon my French, for lack of a better terminology, it was almost like, wait, what? Like, you're telling me before all these major earnings, before FOMC, we had a clean downtrending day? That's hard to accept sometimes. And what it can definitely do is affect you mentally as a trader, right? Now, for me personally, coming into FOMC day, right, I had the expectation that I have with all FOMC days to take it very slow. I'm not a big FOMC trader. I don't personally am not the type of person to put on a lot of risk during events like this. A lot of times I'm away from the charts. It's just kind of how I learned from people that I look up to in the trading space. They don't trade aggressively during FOMC, so neither do I, right? I think that's just sort of how it was instilled in me. If I'm not criticizing one way or the other, I know that there is a lot of opportunity to make money on this chart. Also, a lot of opportunity to blow your accounts. I'm not saying one way or the other is right. I'm just describing what happened to me this week, right? And for me, I ended up having a losing trade early on in the day, and then a winning trade that ended up making a solid move in snow on next week contracts during this FOMC spike. Now, for me personally, I didn't sell nearly as much as I wanted to or should have on this spike up, right? And so when I checked my phone later in the day and saw this shove down, I was sort of like, oh my goodness, not expected, right? It kind of came out of left field. And it's not that I didn't expect volatility during FOMC, but if you weren't actively watching the charts and trading, which after I took a trim of my position and sold a portion of it on this pop, I decided to let the rest ride, thinking we'd go sideways in the day. So it was a bit of a shell shock, right? And then naturally, what starts to come into mind is the FOMO, right? It starts to be like, well, damn, man, you're telling me that there was upside potential, which I caught in this instance. There was also downside potential, which I did not, right? A lot of it. And it wasn't a super hard trade to catch. Again, if you were trading basic market structure principles, you could have looked at this potential lower high and caught in an entry. Again, anything FOMC would have been very small size, limited risk, but even small size would have paid well on this, right? And so 2 days go by, Tuesday and Wednesday, right? Where one of those days, after the fact, and even if you were at the desk, offered very clear entries, a very clear setup that it was easy to miss if you just weren't at the desk for logic reasons, thinking the market wasn't going to move before FOMC. Then FOMC occurs, and there's logical reasons to have FOMO on both sides if you miss this move up. I know there are inevitably some traders who missed this first move up. and bought dips during this pullback and then got whacked, right? Fortunately, that wasn't something that happened to me, but I know there are traders out there that happened to, right? If that happened to you, not only do you have FOMO for missing the move down, you're beating yourself up for buying dips up here. Basically, the Wednesday and Thursday of this week, or excuse me, the Tuesday and Wednesday of this week were very much potentially FOMO inciting, right? They did a lot where it could have put you in a tricky emotional part to trade, right? And here's the part where the market is just, no matter what, going to mess with your head. Again, like I mentioned earlier on, the blessing of FOMC weeks typically is that after FOMC, like all of my biggest post FOMC trades come like a day or two after, where they get continuation of the FOMC move, right? Whichever direction it is, it's continuation or a sharp reversal, but it's a big move after FOMC. That's usually where most traders will make the bulk of their profits using that catalyst of FOMC, right? And today it was very easy to be looking for one of those moves in either direction, to be looking for one of those moves down into these untested overnight lows, or back up into this high spike from FOMC. Both valid targets and both decent sized moves that would have been worth the while to catch, right? But ultimately, what did the market do? Go nowhere, right? We have a strong move down in the beginning of the day that there is an entry offered, but it's not my favorite. There's no levels in the area. It's not something that I would have considered taking. It's a move down that doesn't really offer a good amount of trades, right? And then a bounce that ultimately ends up just range bound. Are there scalps to be had throughout this? For sure. Are there good winning trades that you could have caught within here? For sure. It all depends on your strategy. All depends on what you're doing. I'm not here to tell you that, oh, this is an excuse. The action was bad, all that. It's not what I'm saying, right? What I'm saying is that the last 2 days of action prior to today were very easy to have caused emotional vulnerability and emotional volatility, right? Just based off what happened in the charts, right? Where if whatever trade you took today, right, was managed poorly or executed, it's not an excuse, it's not a justification, but it makes sense, right? And for me, I'll be the first one to tell you, I just haven't been able to find the groove that I typically trade with recently. I think the last week and a half for me has been something where there's almost been sort of a mental block where I just haven't been able to find my way into the right trades, right? And no matter who you are as a trader, this is what you will go through, right? There are stages where you'll just kind of be stabbing at the wrong ideas, or when you get the right ideas, you don't hold it well, right? And it's just kind of this purgatory stage, right? Where it's not like anything crazy bad is happening. I'm not taking giant losses. I'm not fighting demons, anything like that. But it just feels like the death by 1,000 cuts, where it feels like, man, I just can't seem to get out of this little mental block, right? Now, what I've found is that over the course of time, here is the best way to get out of it, right? Which again, that usually doesn't last forever. It'll usually last a week and a half, 2 weeks, 3 weeks, right? But whatever the case may be, usually, right, the way to get out of it is to, one, reduce your position sizing. It sucks because it's probably going to take you a little bit longer to make back that drawdown if you are in drawdown, or you're not going to see the regular profits that you regularly see. But sizing down will save you. At no point over the last week did I feel like I was on a tilt or in vulnerability of doing something crazy or putting myself in really big jeopardy, because I was trading with reduced position sizes, right? That, along with something that I talked about this morning and I didn't enact as much as I wish I did, is reducing your R multiple targets is number 2, right? Typically as traders, we aim for at least a 2-to-1 or 3-to-1 risk to reward ratio. When you're in a little bit of a rut, a good thing to do is kind of reduce that a little bit. When you get 1.1 to 1.5 R and you feel like you need a winner, even though it'll cost you sometimes, it's not a bad idea to reduce that desired R multiple and take the winning trades when you have them, just to get yourself that confidence, get back in that flow. And number 3 is continue to show up every single day. If you show up every single day and continue to do what you know works, over time, you will get back in the saddle. You will be doing well. You will be succeeding. It's just a matter of making sure that you show up every day, right? And that you put in the work. That doesn't mean trade every day. If you show up and you don't see any quality setups, then sitting out or taking a break will for sure help you and benefit you, right? I'm a huge advocate of the positivity of a break, right? But you can't break out of a rut by just taking breaks over and over. Showing up every day is a crucial part of it, right? When you have a strategy that you know works, it just becomes a factor of the law of averages, essentially, where you show up enough times where you will find your rhythm again. You will get back in that flow, right? And the one part that makes it easier to remember is that it really only does take 1 or 2 good trades to wipe out a variety of paper cuts, right? As long as you're keeping your losses not giant from a dollar perspective, and on each trade, you are giving yourself a proper stop loss, giving yourself that size. All it takes is a couple of good winners, and you can find yourself not only right back there emotionally, but dollar value wise, right? A couple of 3 or 4 or 5 hour trades that you're able to hold well, and instantly it's like nothing ever happened, right? So I'm speaking to myself as much as I'm speaking to you all in this video. I've decided to use this video as an opportunity for me to essentially journal of my last few days. Now I'm actually going to journal it as well in my yellow notebook. But for me personally, I wanted to take this opportunity to just kind of share why I think I had a little bit of a tricky time the last week and a half. Because I'll be the first to tell you, it just hasn't been my best trading action, right? And I think that particularly on this week, what happened on Tuesday and what happened on Wednesday in terms of the up and down volatile emotional swings are something that's kind of led me to this trickiness, right? To lead me to this not being able to find my groove, right? But you know my 3 steps that I'm taking in order to bounce out of that. I'm going to show up every day. I'm going to reduce position size a little bit, reduce my R multiple target. And in no time, I have all the confidence in the world that the groove will be found. And I think that the market is setting us up for tomorrow. Again, this video won't be posted till tomorrow, so we'll see if it holds true or not. But with a smaller type of range day inside bar today, the market is setting up to get a break one way or the other tomorrow. So hopefully tomorrow's trading action offers a little bit higher quality opportunities than today. And now in this portion of the video, I'd like to show you the trades that I took on Friday, May 3rd in order to help me bounce back out of this funk. Now let's dive into the charts. Now, what's fascinating about today is it was definitely my favorite setups of the week that I had seen, right? The upside moves, the potential for follow through or predictability on these moves made it hands down my favorite day in terms of setups that were presented to us. And ultimately, I was able to capitalize, well, even though I missed the first few moves, right? So early on in the day, the first trade of the day that I actually took was in Snowflake. Now, Snow has, you can see that I have the notes even from the previous day here. This is what I was looking for on the gap on Thursday. We never got this particular setup. And on Friday, we never got the full trigger, but we did get an initial trigger, right? Which was for me a gap above 160.24 that gets back over, we can buy pullbacks, right? Now, this would have been even better over the opening print. We never really got that opportunity to add during this pullback, right? But Snow did give a nice entry and a solid potential trade, right? Entering using this hammer as our reference point and our signal bar, right? On the break above its high, entering after the successful pullback to the level. This one just didn't end up getting any follow through, right? So one of the things that I'm happy about today that I did, unlike some of the other days, is I said, okay, rather than just hold this one and let it work, because it was valid until much later on in the morning, I decided to pull it early on. And I said, you know what? This chart isn't giving me the vibes that it's going to get the move today. I'm going to go on to a chart that I think will give me that move, right? So I cut my position. I got out of the way. I think it was a couple cents under break even, essentially break even. And I got out of the way and I started to examine the other relative strength names I was watching that day. Now, one that I was hesitant to trade initially just because I took an entry yesterday on this and had a really nice entry right here that technically never hit the stop loss. The stop loss was beneath this line, and I exited at break even on the contracts here because I was just annoyed and I didn't want to let them trail down, and they proceeded to go up 100% later that day. Again, all while never actually triggering my stop loss. They opened up multiple 100% up. I had them around 55 cents. They would be around 250 here, and I didn't have any of them. So I was a little bit hesitant to trade Amazon today. Honestly, I wasn't entirely sure that this was going to be good for me mentally, right? But as we got a push up into the opening print and then a pullback here, we started to set a potential higher low on the 5-minute chart. And I decided to take an entry there with my stop being candle closes under this wick, right? Now, one of the most popular questions that I get asked is, Jake, do you wait for candles to close before you follow your stop loss? And the answer is like 95% of the time, yes, right? If it's really clearly breaking through and it's like broken through that low and this low in one 5-minute candle, yeah, I'm probably just going to press sell, right? But other than that, I've been around the block long enough to know that stops do get wicked out, and I did end up holding this position, just waiting to see how we closed, and that ended up being a good move. The nice part about this is I was able to fully hold this trade until this break of pre-market highs. That was my target, and it might have hurt me because there's a chance I could have been stopped out on this trade multiple times. But I told myself that I really wanted to hold this fully into targets without taking any of the position off early, right? And I was able to do that. I was able to hold this trade from about 45 cents up into about 85 cents. And it's a very, very nice return before ultimately exiting right around here. And I pulled the remainder of those contracts. Actually, excuse me, sorry. I got pulled out of the remainder of those contracts around here, which ended up being right around break even on the contract. So I made it a point to myself that I didn't want to let these contracts go red, right? And that ended up being a good decision. I knew that there was the potential that we held there, and I would have regretted that decision, but I was happy, and this was the main breadwinner of the day, right? From there was actually a couple other trades that were also able to be taken. Main one being on Apple, right? I liked that Apple had come down and traded into this level at 182.96. I thought there was a really good chance that that level held. And so once we got breaks back above this 2-minute bars high, even though it was counter trend and I was still fighting a 2-minute downtrend, right? I was essentially looking for a 15-minute higher low whilst taking the 2-minute entry, right? And that one held valid, and I was able to hold that one really well from like 38 cents up into about 60 cents, so about 50% gain. It offered more briefly, it offered less briefly, and I even did try at one point during this pullback. I even added a couple of in-the-money contracts at Apple, which looked really good, but then ultimately ended up kind of taking me out. I got out of those. Yeah, so I got in the 182.5. This was my additional trade on here. In them at 240, out of them at 237. So just a quick in and out in there. And then the 185 calls was the main breadwinner on Apple for the day. Never quite got the full move up into targets. And who knows? We could still make our way there. It's very early on in the day. But for me at this point, after the stress of this week and the positive dubs, I was happy to get my winners and fuck off, right? But I ended up taking 2 more trades on the day. I should say, but I was still in the Apple ones when I took this first trade. I took a long entry right here on the NQ. Now, unfortunately, I really wanted to hold this one up into these highs up here. And so while I did get a quick move from about 125 on the contracts up into about 195, right? Actually didn't end up taking much profit on this trade because I had Amazon, I had Apple, which were also starting to provide me with profits at the same time. I was taking them. On the Qs, I really tried to hold it as much as I could, and I ended up letting this one trail back at break even. And that's a little bit of a bummer, but that's part of life, right? And that actually happened to me again later on in the day as I took one final trade on the ES, with a short entry on the break of this low here. Right? And the reason I did that, I used ES. I was really watching NQ. I really should have used QQQ puts, but QQQ was the strongest on the day. So even though I was using that level as a reference point, and that was the rationale for the trade, I still used ES because it was weaker. And maybe that was a sign that I shouldn't have taken this trade at all, right? But ultimately, I thought that we had failed the opening print, right? We had tested this 924 levels enough. If we put in a lower high at the level, we could maybe expect some downside continuation. So I took an entry on this break here with stops above this bar's high, breaks beneath that bar's low, right? You can see a theme here, my friends, in the way that I enter trades, one candle stop losses. Again, just go through the trades I've listed today. You'll be able to pick up a pretty dang good idea of what I'm talking about, right? We see breaks under this bar's low. Sorry, my phone's getting blown the hell up. We see breaks under that bar's low, which is where I took an entry, had stops over that high. These contracts actually moved like 40% in a very quick point in time. The SPY puts I was in went from like 1.04 to like 145. And I didn't sell a single one because for me, this trade, even though I was up 40%, which seems like a large number, and it's like, Jake, why don't you just take some profit, let the rest ride, blah, 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 blah. I was aiming for 5109. We had moved about 7 or 8 points in my favor. I was looking for another 20. So I wasn't interested in the 40%, right? For me, that had come out to like 2R, 2x my risk. I wasn't interested in that, right? I was interested in the full size move down, right? That being said, it became pretty apparent pretty quickly that we weren't going to get that move. And I ended up exiting these contracts right under break even. So what you'll notice is a theme on the day. Several trades of mine, I ended up entering, having a little bit of profit, and then exiting around break even, right? For me, in the style I trade, I was hoping to hold those ones to bigger winners. And so giving back the profit isn't harmful to me. That isn't something that mentally hurt me, anything like that, right? Because both of those particular trades, the first being the QQQ, where I wanted the spike up into this spike high here, and the second being the SPY or the ES, where I wanted to move down into this level here, right? I have no problem that I let those two trades essentially trail the break even after being in profit because I was aiming for a larger move, right? The trades that I did aim for a larger move today on, I got. And being able to hold that Amazon with no trims until the high of the day was extremely, extremely rewarding for me, right? It definitely kind of rejuvenated me. So I personally feel like my little couple week, not so great trading action week, really just this week, not so great trading action that you all saw me talk about in the previous portion of this video, I feel rejuvenated completely. And that's really the amazing part about trading is it takes one day. It takes one type of set of trades. It takes one rhythm that you find to completely bounce back out of a negative mental state. And now I could not be more excited for Monday. I am so ready. I feel like I'm going to absolutely crush next week. So with that being said, my friends, I hope you enjoyed this video and I'll see you in the next one.